boost my confidence. My cocaine.
Good afternoon, my name is Mina and I'm the founder and CEO of Numida. Let me introduce you to Faith. Before joining Numida, her fledgling small business was struggling to stay afloat. She lacked a trusted business partner and struggled to manage her cash flows while also trying to grow. And like 90% of Numida's clients, as an owner-operator, she was single-handedly trying to turn her dreams into reality. When she learned about Numida from a friend in August 2021, she was about to shut down her beauty salon. But we gave her an initial $100 unsecured working capital loan that gave her another chance. And since then, we have provided more than $20,000 of business financing to Faith. With Numida's partnership, she has grown significantly and now employs 15 young women in Kampala. Small business owners like Faith are the reason why Numida exists. And there are 20 million of them across Africa who are financially excluded. When we started Numida, we set out to build the best working capital product for small business owners across the continent because consumer digital lending is expensive and not suitable for business needs. Traditional brick-and-mortar microfinance is slow and burdensome, and informal lenders are predatory. But with Numida, we serve new clients in 24 hours. They simply download our mobile app, work through our straightforward loan application. Our machine learning models alongside our credit officers make good credit decisions quickly. And customers in good standing can reborrow with larger loans automatically. So we've gotten pretty good at this. Since 2021, we've dispersed more than $100 million of unsecured working capital to 85,000 business owners like Faith across Uganda and Kenya. And also 60% of our clients are women-owned businesses. So we understand that working capital might be the biggest problem that entrepreneurs face on the continent, but it's not the only one. And this is why we've partnered with Stanbic Bank in Uganda to launch a high-interest savings account so that our customers can also save. We understand that that's also what they need in order to achieve their dreams and thrive. Of course, we couldn't have done all of this without strong partners, and we've raised $23 million in debt and equity to date from world-class investors like Y Combinator and Serena Ventures in order to accelerate our mission. And Numida's mission is bold. It's to enable 1 million small business owners across Africa to achieve their dreams. And ABH can help us achieve this bold mission by de-risking the launch of new products and new markets. And with that, I want to leave the last words to Faith. Thank you.
"13 minutes with the judges. Judge Fred, please go ahead."
The voice of God has spoken. Thank you, Mina. Well done. Congratulations. Great business. You're solving a real problem. Working capital is a big issue for all African entrepreneurs. And good to see you're getting your high repayment rates. What interest rate are you charging?
Yeah, so we offer risk-based pricing. It can go anywhere from 8% to 20%. Our average loan period is 30 days.
Is that per month or per year?
That's per 30 days.
Per 30 days.
Yeah, so if we provide, for example, $1,000 to a fashion boutique and they're a low-risk client, they'll come back and pay $1,080 to us.
So that's about, you said what, 12% a month? 8 to 12?
Yeah.
So that's about 120% per year.
We don't provide 12-month loans, and we match the loan size to the size and the margins of the business.
What's the average tenure of a loan?
30 days.
30 days.
Yeah, short-term working capital.
Short-term working capital, okay.
And I just want to clarify this point because I think it's very important because a lot of people will come and point on APRs and so on. If my customer has the ability to sell more and make more revenue, but they do not have capital to buy inventory or to serve clients, they miss that revenue. And so for them, the way they think about the price is they say, if I take this $1,000, what revenue can I turn it into? And how much am I willing to give back to Numida for providing me this opportunity to gain this revenue. And so we do target high margin retail clients. We're not really in the FMCG space because the margins are too low. Our top sectors are beauty, cosmetics. We heard from a lot of cosmetics businesses today. They make really good margins, so we target them. Electronics, motorcycle spare parts, vehicle spare parts, and hardware supplies.
That's great. So, I mean, if you've got such good, yes, so you give, most people aren't paying the full year, so I get it. But you are earning on your money about 100% a year, 120% per year. So, why is your gross margin so low? And why are you still losing money when you're making such high interest?
I mean, the reason why interest rates are high is because risk is high. I mean, that's the challenge of serving this customer segment. So the two options are, we leave them financially excluded. We say we can't serve you because it's too risky.
That's not my question. I'm saying, why are you not making?
I'm coming to your answer. So, risk is high, which means loan losses also are high. We turn over our portfolio every 30 days, right?
But you said you get 94% collection, so that seems like
correct. So that's a 6% reduction off the top from your top line, right? And then you have to take into consideration cost of capital.
What is your cost of capital?
Operation. Right now, our average cost is 18% on the USD plus hedging.
Annually?
Annually.
But you're earning 120% annually. You're paying 18% annually. You only lose for 6%.
Per month.
6% per month.
The portfolio turns over every 30 days. So if I collect 94% in 30 days, that's 6% I've put aside, right?
So your annual losses, therefore, is about
6 times 12.
72%.
Yeah. Correct. And this is the challenge with serving this customer segment. And that's why it's important to only serve businesses that can afford this price, which are high margin. We're not a consumer lender. Okay? We have no interest in being a consumer lender. We target businesses.
Okay, so the loss ratios are very high. They're much higher than is presented.
It's standard for this industry, but we have the lowest loss ratios, even comparing against other SME and consumer lenders. But it's just standard. I mean, this is unfortunately the economics of this market. And that will change over time as new sources of data come, as the ability to underwrite improves. We have now dispersed, in our lifetime, 600,000 loans. So we have a lot of data that's going back into our machine learning models that is also improving our ability to price and underwrite so that we can bring down that lowest price for the highest risk customer, and we can have a better blended overall cost. But I think this is just a fact of operating in this market. I think Diane is a banker. She probably knows way more about this than me. But this is the challenge we face, which is why we do not target consumers. Other digital lenders target consumers, extremely high loss ratios, which means their prices are even higher than our prices. But those people do not have steady incomes. They do not have the ability to take that money and turn it into something, to leverage it and turn it into something more.
Okay, I'll let you go, Banka.
Sure. Thank you, and congratulations for making it to the final. My question to you is, how do you work and relate with mobile money providers? Because they probably, provide similar products, maybe not working capital, but they do a lot of consumer lending.
Yeah, exactly. So.
And how do you collect?
Yeah.
Because these people receive their revenues, their money through the bank or through the wallet. So how do you manage to collect?
Yeah, so one unique thing about Numida is that we specifically built this model, our underwriting model, to target cash-based businesses. Because these are the ones most financially excluded. They're not banked, and they often don't transact with their mobile money wallet. They're doing the majority of their transactions through cash. And when we started, we said, how can you underwrite a business that transacts with cash? Okay. We disperse through mobile money, and we collect from mobile money through mobile money. So mobile money operators are actually our partners. They're like distributors for us. In Uganda right now, we're actually beginning to develop a partnership with MTN because they have their Momo Pay merchant product, and those merchants need working capital. So we're going to be working with them to collect some of that transaction data and offer merchant cash advance to those merchants. In terms of collections, you asked a question about collections. Customers need to open the mobile app to pay us. We don't auto-deduct from mobile wallets. So maybe that will also put into perspective how high the collection rates are, considering that. And so what's the best way to collect? It's to make a good decision at the beginning. Your loan goes into default on day one when you disperse that loan. And so for us, our focus is always, let's make sure that we choose the best people that are going to use this money, leverage it, turn it into something, and come back and repay us because we've given them an opportunity to grow their business. And that's exactly what happened with Faith. I mean, this first loan is a very tiny loan, very, very low risk for us. It's a very small loan for her. But because she's stuck around and she's performed and she's grown, we've given her more than $20,000, which I think is very rare in a place like Kampala.
So do you give your clients the possibility to pay back the loan before maturity because it's a 30-day loan?
They can if they want. They can if they want. The client actually in the mobile app, they can choose their term from anywhere from 15 days to 90 days. It's a self-selection.
Great. So it's really an underserved market, clearly, especially because they are cash-based. But my thinking is that, cash is going to disappear.
Yeah, and that would be great for us.
So, but that also would be great for telcos because they'll get an opportunity to, partner with maybe some people like you or banks to offer these products.
So let me give you the example of MTN. MTN came to us and said, we have all these merchants. They want working capital. Nobody knows how to underwrite these merchants. Stanbic Bank came to us and said, if you underwrite those merchants, Stanbic Bank will give you all of the portfolio for those merchants. So we become the technology service provider. We manage the portfolio. We disperse, we collect. We get money from Stanbic. We give it to these MTN merchants. Telcos are never going to hold loans on their balance sheet. They don't want to manage loan books. They want other people to come and manage loan books for them. Stanbic is incapable of providing a $500 loan to a merchant like this. It's too expensive. Putting it on their loan management system will be a nightmare. And so that's where we are actually very uniquely qualified to do this. And the reason why we're able to do this now in Uganda is because we have such a good track record there. They can see 6 years of performance data. They can understand the economics. They can go talk to the customers and get feedback from the customers. So I don't see us competing at all with telcos. I see us actually working together. And once we do this in Uganda, definitely, we'll try this in Kenya. We'll come to Rwanda. I'm meeting with BNR on Monday. So we're coming.
So after your meeting with BNR, come to see us. Maybe
I've already spoken to your people. I'm ahead of the game.
Amazing.
Don't worry.
Thank you.
Okay. I want you to know something, Mina. The problem you're trying to solve is the biggest problem that every impact investor is trying to solve for economies like African economies. And the person who cracks it at scale would have created a miracle.
Mm-hmm.
So I hope that at the end of all of this, that you actually have the model that works effectively to do that, because that's where the entire growth that needs to be unleashed on the continent resides.
Absolutely.
Okay. Now, I see from your numbers,
I
mean, you were making losses every year until 2024. Your projection for 25 says you are going to be profitable. So I'd like to know exactly what you're changing in your model, or what's changing in your entire operation that accounts for that. Stanbic is not a retail bank, so I don't know if you're rightly partnered in terms of trying to deliver the kind of thing that you're doing. But tell me what you're going to do.
So actually Stanbic Bank is one of our debt providers in Uganda already. They provide on-lending capital, which is great because it's in local currency. It ends up being slightly cheaper than borrowing in USD. So bringing down cost of capital, big goal for this year in 2025. Continuing to improve on our credit scoring models will reduce loan losses, which affects gross profit margin. That's the biggest expense other than staffing is loan losses. So that will definitely improve our ability to become profitable. And ultimately, it's growth, portfolio growth. We have a fixed cost base. That fixed cost base is not changing. Our top line, as we grow our top line this year, will be covering our fixed costs. And that's how we're going to be EBITDA positive. We should be EBITDA positive in Q2.
Okay, but for the level of coverage that you're going to make between 24 and 25, that growth has to be exponential.
I think in the numbers you have, we're doubling in size this year, 2025. And we doubled in size last year, and I think the year before we tripled in size. So we're continuing along this path, and we have the capital to do that. We have the debt capital to do that, to grow the portfolio to that level. So for us, it's just a matter of execution, and we've been executing for the past 7 years. So the question is, if not now, then when? That's our primary goal this year.
And right now, you think you've turned the table?
Yeah.
It's profit all the way from here?
Yeah. I think by Q2, once we're EBITDA positive, we have internal company key results. We said we need to become EBITDA positive in Q2 and sustain that EBITDA positivity the rest of the year and into the future. So
what's your scaling plan then, outside of Uganda?
We're in Uganda and Kenya right now. We started our first loan we gave out in June 2017 in Uganda. Then we started in Kenya in January 2023. Rwanda, we will launch a pilot in Q3, and Tanzania as well. We're just in the final stages of both countries' licensing requirements. So that'll be East Africa. Now, Rwanda has done a very visionary thing with this licensing passport. We have been wanting to go to the Ghanaian market for about 4 years now. And with the licensing passport, we'll be able to hopefully use that Rwandese license as well to go to Ghana and launch there.